What is going on, ladies and gentlemen? In this video, I'm going to be going over the top 5 reasons why people fail. So what's the first reason why people fail? I think the biggest reason why people fail in this market is they don't know when not to trade and when to trade. If you were to go to forexfactory.com, all right, and you were to look at the news today for USD, what do you notice? There's no red folder news. Same thing with tomorrow. And the problem with this is there's no red folder news, meaning a lot of the big objective will not get hit. There's not going to be multiple objectives in the day. And what does this mean? So like today, when I go to my index commentary, okay, I literally said 9:01 a.m. today, said targets are today. Once they hit, I'm not trading. And the main reason was because I knew that this analysis was pretty easy for me, and I figured we'd pump. I know once this objective's hit, price is going to get sloppy. And meanwhile, when that objective hit, you can see a lot of failed setups. Like here, for example, there was a textbook inversion here. It was coming off of sell side liquidity right here. And there was a kind of manipulation leg. There was good momentum. Yeah, it just fails. And the lack of volatility causes these setups to fail. And it didn't even hit the spot where it would be a break-even trade. So unfortunately, this setup just fails. And it's something you need to learn how to avoid. And today is just one of those days where like red folder news, pretty easy, bias off open, and once that hits, I want to be done because I want to take what the market gives me. And when I woke up this morning at 8:30, right here, this just looked like a really easy bias to pump to this, okay? Another reason why people fail is they don't understand that highs and lows can be the draw and inefficiencies can be the draw. So like this morning, for example, and even last night, we had a lot of unbalanced inefficiencies. And if you watch my Sunday night class yesterday, which I posted on YouTube, I said I was bullish for today, at least to go up back to this hourly fair value I got because it was unfilled. And a lot of people, they don't recognize that something like this, when we're at this time period, can be a draw on liquidity. And okay, this is not hindsight. You can literally go back to my video yesterday, and I literally said I'm going to be bullish for today, and this is going to be my first target. And then I also said if I wake up and we kind of violate this, I'll be bullish. So it's not hindsight, but a lot of people don't understand that this can be the draw on liquidity. And one big reason why people fail is because they don't understand, like if you do take a long position here and you are targeting the highs, you should be scaling here. A lot of people don't scale here, and what happens to them is they're up really good, and all of a sudden price just rejects and then goes back up, or rejects and just goes straight down. And you have to understand that this is always going to be a speed bump, and scaling and taking partials is very, very important. All the best traders I know take partials. I promise you, good traders will scale, and you can't go for that home run with your full position. Okay, stop going for a 10-hour play without scaling. This is a scale spot 100% of the time. It's in premium. If you need to understand, like if I'm wrong here and we reject here, it's good to scale, whatever. And that's the biggest thing. And when I see these traders, they're like, oh, I'm up 50 points here, blah, blah, and then all of a sudden they're red again. And they're like, and it's so demotivating. I get it, but it's been demotivating because you don't know how to scale, and you need to scale big speed bumps like this. Not a lot of people realize that. The third reason, and this is a very good one, you will not hear a lot of people talk about this, I promise you. The third reason is this. People give up because they try to do analysis in hard conditions, and when they're wrong, they're like, they totally get demotivated. Like if I open up the chart and I see this and I'm trying to make a really nice prediction, like, oh, the market should do this for the day and then go up, whatever. And I'm trying to do this prediction in this type of price action, and I'm wrong. That used to really demotivate me. How do you overcome that? You need to recognize that you cannot predict this price action. I mean, there's just chop on the higher time frame occasionally that you will not be able to predict, and you have to accept that. And whenever I see some chop like this, I actually don't try to predict. Okay, I wait until the bias comes to me. And this would have been like if I woke up at this day, or if I was trading Asia this day, this would have been a day where I literally would go in neutral with no bias. Because to me, I see we swept sell side, and I see we've equal highs above. So like, I mean, I maybe would lean bullish, but you never know this chop, and it's just really choppy, and I just play what I see. So this would just be one of those days where I'm not going to try to make a bull prediction. Versus today I was able to easily make a prediction. Today we were coming off sell side. We have a giant momentum candle, And it was very, very easy to make a prediction that we're going to go up today at open. Like, it was very easy. So like USD JPY is an example right now where, in my opinion, this is a pretty easy analysis because we have buy side above and we kind of have this V-shaped recovery. We're coming off this sell side liquidity. And again, we've equal highs right here for anyone wondering. So like, this is a spot where this is a really easy analysis. But once we hit the equal highs and then go like this, is that going to be that easy? No, it's easy now, and you have to understand that, but it's not going to be easy every single day. The fourth thing is looking at the market in terms of liquidity. I teach a lot of students IFVGs, and it's great. They love it. They love IFVGs, but the issue is people will give up because they only see the market in terms of IFVGs, not liquidity. And this is one of the biggest downfalls I ever noticed. And this is why I think this is probably the number one reason why most people stop using IFVGs specifically. I mean, stop looking to market in terms of IFVGs. That's good if you're beginning, but once you start to get really advanced, you should definitely be looking to market in terms of liquidity, because there's going to be entries that I take that you're not going to take because you think, oh, it has to be a singular IFVG, it has to be whatever, blah, 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 whatever I say, but that's more catered towards beginners. The fifth and final most mistake people make is they don't have an actually good strategy. They learn ICT concepts, they learn whatever, and they try to use way too many concepts from something they learned. So, for example, when I started learning ICT concepts, I tried to use breaker blocks combined with mitigation blocks, combined with free rally gaps, combined with order blocks, and I tried to combine all these little things. Instead, after learning it for 2 years, I decided to try to just branch into one single strategy, and all I use is IFVGs now. I will have a free course that I am uploading, a free bootcamp actually. It's going to be all my YouTube for free. I'm uploading it. This is going to be the last video until I upgrade the bootcamp. And I'm going to be going over most ICT concepts and then slowly transitioning to one strategy, which is my strategy I use is my IFVG strategy. So if you're interested in that, subscribe to my YouTube, leave a like on the video. If this video gets 150 likes, we'll start uploading it tomorrow. So stay tuned for that, and stop using a million different concepts, because that's probably the biggest mistake I see with a lot of people. That's it for the end of this video. Can't wait to see you guys in the bootcamp, and I will see you guys later. Peace.